So there's this incredible story unfolding right now that starts in healthcare, but its shockwaves are completely reshaping the massive $1.5 trillion food economy. Yep, we're talking about GLP-1 drugs like Ozempic. With millions and millions of people using them, they're not just losing weight, they are literally changing the fabric of what people want to eat. But we're not here to just talk about the drugs. This is about the secondary disruption they're causing, and the powerful kind of overlooked investment idea that's bubbling up from it. All right, let's get into it. First, you've got to wrap your head around this number, 70.5 billion euros. That's what experts think the global sales for these peptide drugs, the category that includes GLP-1s, will hit by 2028. I mean, this isn't just a successful product. That's a force of nature, an economic engine so big it can actually move entire markets all on its own. And see, that's the key here. A force this big never just stays in its own lane. It spills over. It changes human behavior on a massive scale. And when millions of people start changing what they eat, what they crave, and how much they buy, well, those little ripples turn into a tidal wave for industries that seem totally unrelated. And that is where our story really begins. So here's how we're going to break this down. First, we'll look at the blockbuster drugs themselves, the initial explosion. Then, we'll talk about why jumping on that bandwagon is a really tough, crowded trade. From there, we'll follow the tremors into the food economy, to see the domino effect. We'll dive into a really cool case study about protein substitution that's happening right now, and all of that will lead us to the main idea, the timeless strategy of investing in the boring, unsexy plumbing of the market. Okay, first things first, let's set the stage with the part of the story most people already know, the absolutely incredible rise of these GLP-1 drugs. This is the catalyst for, well, everything else. There's a reason people are calling these GLP-1 drugs one of the biggest medical advancements in a long time. They were originally for diabetes, but their impact on weight loss has turned them into a massive cultural and medical phenomenon. It's a whole new class of blockbuster therapies, and we're still discovering all the things they can do, from heart health to, well, who knows what's next. Now, when you see a success story this huge, the first thought is obvious, right? Just buy stock in the big companies making the drugs, like Novo Nordisk or Eli Lilly. But we have to ask ourselves, is the most obvious trade really the smartest one? The legendary investor Howard Marks just nails the problem with this quote. When a story is this famous and the stocks are this big, the trade gets incredibly crowded. Every professional analyst, every hedge fund, every person with the trading app is looking at the exact same information you are. So you have to ask, what's your edge? What do you know that the rest of the market doesn't? And honestly, the answer is usually not much. And this really gets to the heart of the challenge with investing in pharma. It's a high-stakes gamble. You're always trying to answer this one huge multi-billion-dollar question, trying to predict which company will successfully navigate clinical trials, get FDA approval, and fight off competitors to make the next big thing. It's just incredibly difficult. One tiny setback can erase billions from a company's value overnight. So, at the end of the day, for most of us, trying to pick the winning horse in the big pharma race is, just like our sources say, a question that's too tough to answer. There are too many variables, the risks are too high. And that reality, well, it forces us to look somewhere else, to think one step ahead of the crowd. And that is where the real opportunity starts to show up. Okay, so if the direct pharma play is too crowded and risky, where do we look? We pivot. We stop staring at the cause, the drug, and we start analyzing the effects. This is all about using second-order thinking to find the ripples from this medical revolution. This is such an important idea in investing. The first-order effect is easy to see. People take a drug, the drug company makes a ton of money. Simple. But the second-order effect, that's more subtle, and it's often way bigger. What happens when millions of those people fundamentally change their relationship with food? See, that's not a pharma story anymore. It's a consumer story, an agriculture story, a whole new economic story. And hey, this isn't just a theory. We're seeing it in the real world. The giants of the food industry are on high alert. Sources are reporting that huge consumer companies, we're talking PepsiCo, General Mills, all the big names in snacks and processed foods, are openly talking about their concerns. They're watching demand for their classic high-carb stuff go soft, while demand for things like high-protein snacks is growing. Their fear? Well, that's our signal. So if people on these drugs are eating less, especially less of the sugary, carb-heavy snacks, what are they eating instead? Well, the evidence points to a big shift toward protein to help maintain muscle mass. And to really get how this works, we can look at a perfect, real-time analogy happening in the market right now, the big protein rotation away from beef. Okay, let's walk through these numbers because they tell an amazing story. First, supply is way down. The US cattle herd is at a 75-year low. Because of that, the costs for producers have shot up 32%. But here's the crazy part. Restaurants have only been able to raise menu prices by 14%. So what happens? A giant like Tyson Foods doesn't get rich. They get squeezed. They actually lost $319 million in their beef division in 1 quarter. Sky-high prices are actually crushing their profits. And this slide just lays it all out, clear as day. This is economic substitution in action. Beef becomes a luxury good because it's so expensive. So what do people do? They switch to the value alternative, chicken. It's cheaper to produce, the production cycle is way faster. This isn't a guess, it's happening right now. And it is the exact same dynamic that we can expect to see play out in the wider food market because of these new drugs. This whole beef versus chicken case study brings us to our final and maybe most important point. We're going to take this lesson and turn it into a timeless investing principle. During a huge disruption, don't chase the shiny new thing. Instead, invest in the boring, essential, unsexy plumbing that makes everything else work. This strategy was basically perfected by the investing legend Peter Lynch. His whole idea was that the biggest returns often come from companies that, let's be honest, a little bit boring. You know, companies in dull industries or ones with weird names, they don't make for exciting conversation at a party, but because everyone else is ignoring them to chase the hype, you can often buy their stocks at a fantastic price compared to what they actually earn. This example from the peak of the dot-com bubble it's perfect. Check this out. At the end of 1999, the market decided that the tech superstar Yahoo and the boring fast food company Yum Brands were worth the exact same amount, $5.9 billion. But here's the punchline. Yum Brands, the company that runs KFC and Pizza Hut, had over 17 times the actual earnings of Yahoo. The market was literally paying the same price for pure hype as it was for cold, hard profits. We all know how that movie ended. So why does this happen? Well, there's this powerful concept from George Soros called reflexivity. It's basically a feedback loop. A stock gets some good buzz, so the price goes up. That rising price creates even more buzz, which sucks in more buyers, pushing the price even higher. It feeds on itself until the stock price is completely disconnected from the company's actual business. It's a hype bubble, and we all know what happens to bubbles. Eventually, they pop. And that brings us right back to today. The disruption from these GLP-1 drugs is really just getting started. The first-order effect, the pharma story, is obvious, and the hype is all focused on a handful of big stocks. But now, the second-order effects are rippling through the food economy, creating this huge substitution toward protein. So the crucial question for all of us is this. As the story unfolds, what boring, essential, unsexy plumbing, the food processors, the ingredient suppliers, the farm infrastructure is going to be revealed as the real, overlooked winner of this revolution. That's where the next big opportunity is hiding.